I know a lot of you are doing real estate on the side. Good for you. Capital gains is a fun one, and I'll tell you why. Short-term capital gains means if you've owned an asset for less than a year and you've had an increase in that value and then you liquidate, like sell it, you're going to pay ordinary income tax on it. But if you've owned that asset for more than a year, then you move into long-term capital gains rate, which is currently set at 0%, 15% or 20% depending on your income. Yes, there are some proposals to change that, but we need to look at this because here's why this is exciting. If you have an asset and I can move taxable dollars into the long-term asset class and the long-term capital gains class, I can often save significant dollars when it comes to taxation. So if you're looking at it basically to sell an asset and you're looking at getting rid of something, it would be probably way better and worth your time to arrange a time to talk with my team so they can make sure that you're doing it the right way. The last thing you want to do is have an asset that you sell at 11 months and get stuck paying ordinary income on it. Because in that example, if we could have held it just another month or two, you could have paid capital gains and called it a long-term rate and potentially saved yourself some money. So let's be aware of this. Let's understand it so that as we make decisions in the business, we're ahead of the game. Again, preparing our taxes, getting ahead of them. Be aware of depreciation recapture, particularly when it comes to real estate assets. Another idea here is that we could potentially convert an income property into a personal property. When you think about rentals and you think about properties, ask yourself, is this something that could actually become a personal property? And is that property something I might want to live in for a while? Would there be some benefit to that? Of course. There is the 1031 exchange option out there. There is currently a proposed end on certain investments for the 1031 exchange. But under the current guidelines, a 1031 allows us to sell certain assets and buy a like-kind asset, something similar. Yes, eventually you're going to be taxed on it. You're going to pay taxes, but you can accumulate wealth and invest it in ways that allow you to do so without having to pay taxes every time you liquidate an asset. My team can help you. Listen, money is hard to make and you don't want to waste it. Yet too many small business owners just let money leak out of their operations every day without even knowing it. How is this happening? They're not optimizing for their taxes. Taxes are a major expense in business, and you always have to think forward about them. TaxHive is designed specifically so small businesses can get what big business already has: strategic tax planning. So now let me offer you something I wish I could have had early on in my business career. My partners and I at TaxHive have created a free, simple questionnaire that will help you see the tax deductions that you're missing out on and give you a personalized blueprint to help you keep more money in your business. In fact, I'm so excited about getting this blueprint into your hands that I've talked my partners into guaranteeing that after you have a quick call with our team, they will help you find at least $10,000 in missing or potential tax deductions for your business. Or they'll pay you $100 just for your time. And that's a deal you shouldn't pass up.